Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and I've got a lot to get into today. Got some Bitcoin stuff to do as per usual. Then I want to build some situational awareness because of course we have CPI print later today, and I want to point out a few things and then get into some charts. So without further hesitation, let's get into it. 44% of American voters either own or are considering owning Bitcoin and digital assets. This is adoption. I'm sure we are going to continue to see continued adoption. Massive news coming out of the Middle East. The Middle East have just launched their first spot. That means Bitcoin settled rather than futures, which is cash settled. They have just launched their first spot Bitcoin ETP. And this has launched in Dubai, which is rapidly becoming the crypto capital of the world. You could certainly make an argument that it is already the crypto capital of the world. So with all of this said, first, let's point out that this is the tsunami of money that's going to flow in that I've been talking about. I've mentioned multiple times on this channel that sovereign wealth funds want to move in from the Middle East into Bitcoin. I've mentioned multiple times there is huge demand from the Saudis. So this is the first sort of steps that we would expect to see. The second point I want to make while we're on the topic of ETPs, ETCs and ETFs is that the SEC has rejected numerous times a Bitcoin spot ETF, and they say they do so to protect investors. But of course they have absolutely no problem with you buying this bond ETF, this exchange traded fund. Okay, they have no problem with you buying this, but heaven help investors that should purchase a spot Bitcoin ETF and have exposure through traditional finance accounts, right? This is the ultimate oscillator. This is a momentum oscillator, and you can see that we are getting close to a trendline break, or at least a test of this trend line. We haven't broken it yet, of course, but this indicator is telling us that we have not only bounced off the bottom line, okay, we are starting a move up. The momentum is starting to build to the upside, and I'm sure we're going to continue to see this. If you've been watching the channel, you'll know I am a proponent of this cycle low that is coming into focus in November. So the king of cycles here, Bob Lucas, has posted this today, and it fits my thesis very well. Day 35 of a 60-day average Bitcoin cycle. Vol is tightening, and it should lead to a sizable move near the end of the month. We've got volatility squeezing whilst volume is slowly ticking up. This means that most likely when this move happens, it's going to be explosive. The main timing band window, he said here, is October the 2nd to the 12th. He actually means November 2nd to the 12th. I had this as the 7th to the 14th, so not too dissimilar. The intermediate trend is down, but the 4-year cycle low is ahead. The longer prices stay tight into this window, the more chance we have of shooting higher out of it. So you can see here, he's outlined two paths. The bearish path where we drop quite far down into the 60-day cycle low, and the path that I think we're going to take in blue, which is where we end up holding this low. We do not breach this low, or if we do, I think that we maybe just sweep it, a slight undercut. But honestly, I don't think we lose this low. I think that that's asking too much of the technicals and the on-chain metrics. I think that we're going to see this sort of sideways chop, a little drop into this 60-day cycle low, and then we're going to go. And I believe that this blue scenario is in play. I believe this blue scenario, which I've been calling for weeks, I think all the way back since here, even before then, I think that that is going to be the start to a bull market for Bitcoin. At the same time, the Bitcoin percent of supply active 1+ years ago has been stagnant. When this metric rolls over, Bitcoin goes on massive runs. So the first step is that it needs to slow down, then it needs to stagnate, and then it needs to roll over. We are just looking for that final rollover. Stock money lizards, look at this. Broken out, retested, right at support. Do we lose this and come back down here? I don't think so. I think we're going to bounce, and the oscillator at the bottom, the true strength index, is showing that we are just about to tick bullish as well. This here from the rational route is an interesting way, it's a different way of looking at Bitcoin based on its 4-year cycles. Okay, so just to save you some time, these green dots here are the halvings. So when we get to these, we halve. The red dots are the all-time lows here, and here for the cycles. And as we go out in each one of these concentric circles, we go up a factor of 10 in the price. Given that this is our low here, this is the low from June. If we have one more dip, this line is going to trend inwards, and this is going to start to look like this entire thing is broken. If these lows hold, however, and we start to move out towards the outer circle here, the second from the most outer circle, which is $100,000 Bitcoin, that would seem like everything is fine to me. So The fact that this could trend inwards on one further dip, I don't think that's something people should be championing. I don't think that's something people should be rooting for, unless you want to see this thing go to zero. But if you don't want to see this thing go to zero, then I think we need to start working our way out rather than in. So that's the Bitcoin stuff. Let's build some situational awareness, because yesterday we're coming off the back of the PPI data for the United States of America. Today we have the CPI data. What does all of this mean? Well, yesterday PPI data came in stronger than forecasted, which is often a leading indicator for CPI. And this is because producers, when they are facing higher input inflation, they pass it on to their consumers. They don't just bear this inflation for themselves, they pass it on to consumers. Nobody mentioned anything though in August when PPI came in well below forecast and was negative. This is a very, very difficult market. This is indeed a very difficult market, and this is why we must build situational awareness going into today's CPI print. The Nasdaq is on the brink of a structural breakdown, having difficulties finding new sellers, as most are hedged via options. People are not selling stock. People are not emptying their portfolios to cash. They are hedging with these puts, as I'm going to show you in a minute, and as I've shown you before. A CPI print above 8.3% will be needed to see a forceful leg down, and a print below 7.9% will see us strongly break back above to the upside. The Bank of England is warning that households face a strain over debt repayments similar to pre-2008 crisis. There is plenty of fuel out here. There is a massive wall of worry for the market to climb. And speaking of yields, the UK 10-year yield has bumped up against some of the highest levels since 2008. This is leading people to think that we have to be behaving like 2008 going forward. The yield spreads between mortgages and the US Treasury are close to 2008 and 2020 levels. So it is something about to break. You can see here, we are close to this pandemic level and we are close to the 2008 levels. Something is about to break. We know this. Something needs to break in order for the Fed to change course. Also yesterday, we had the Fed minutes. During these Fed minutes, England's bond market started to blow up. Okay, the bond market for England just continues to get worse and worse and worse. And this is in the face of unlimited QE, unlimited bond purchases. Companies in the UK are also being asked for loans from their pension funds. Do you realize how bad this is? If you're a pensioner, if you've got a lot of your wealth in a pension fund, I would strongly consider taking steps, speaking to a financial advisor. The financial advisor is probably going to tell you that you shouldn't be selling your stocks at the low, you shouldn't be emptying your pension. I don't give financial advice. That's not the remit of this channel. But what I will say for sure is, if I had a lot of wealth in a pension fund, and I was of that age where I was relying on that wealth and I had no other wealth, I would be emptying it out immediately. These pension funds are entirely broke. And if you haven't been convinced of that over the last few months or over the last few weeks, then I don't know what will convince you of that. Remember, these pension funds got margin called and had to ask the central bank to be the buyer of last resort. Remember that, okay? These funds do not exist. They're not even backed. They are leverage on derivatives, on more leverage. Britain's Financial Services Minister has said a delay in issuing the digital pound would create economic financial problems. And now the Bank of England is trying to avoid the collapse of pensions. You wanted digital, you're going to get it. So what we have here is problem, reaction, solution. The problem is the pound is going to zero, the pension funds are blowing up, and the bond market is breaking. The reaction is to get the general population, the general public, to be begging the government, please, Mr. Government, help us, do something. And the solution, of course, is central bank digital currencies, perhaps with universal basic income, and of course, only in exchange for your freedoms. Only if it is accepted under the pretense of having a social credit score attached to it. Only if it is accepted by you that they can just tell you what to do, tell you how to think, tell you how to speak, or else you do not get your UBI, you do not get your money, you do not get your pension fund. Remember, Bitcoin is the exit, and Bitcoin is an IQ test for risk. Gold too, of course. Let's keep going. We've seen South Korea's central bank pivot, and now they are swiftly trying to prepare to activate stock stabilization funds. Okay, what does this mean? It means they're going to print money to prop the stock market up. We are seeing all of these dominoes begin to fall. This is exactly the sort of thing you would expect to see from a big pivot from all major central banks. We know the media is slowly shifting to start to put international pressure on the Fed, to start to tell the Fed that they need to back off with their incredibly tight monetary policy. The S&P has declined 26% over 9 months, reaching its worst point so far on September the 30th at 3584. The high point was on January 4th at 4818. This chart shows the market is following a worse than average track. there is a massive wall of worry to climb. There could, of course, be further downside, but I think given where we are in the cycles, given the amount of puts and hedging I'm going to show you in just a minute, there is a massive upside rally coming in the near future. So here it is. Look at this. Look at institutional players buying more than 10 billion in puts on individual stocks just last week. Look at this spike in puts. This is an entirely hedged market. So the question is this the great collapse where everyone got rich? Is this what we're seeing? Of course not. This is fuel for a short squeeze. I am convinced of it. Of course, that remains to be seen, but I do not want to be short a stock market that is this hedged. Look at this compared to 2008. It's not even close. Okay, it's over double. Look at this. This is not a market in which you want to be short, in my opinion. Here is a chart that Wall Street does not want you to see. The treasury market volatility versus Bitcoin volatility. Bitcoin is too volatile, is what everyone says. However, it is considerably less volatile than the treasury market at the moment. What does that tell you? This tells you that what is supposed to be the safest market, the safest asset on the planet, the treasury market, is blowing up. It's breaking. It's breaking. And what happens when things break? The Fed's hand is forced. There's nowhere to hide. As this correlation matrix here shows, bonds have gone from blue to red, leaving only cash for safety. It's just been a sea of red and not just for returns. There is nowhere to hide. Things are starting to break, and they are going to continue to break until the Fed reverses course. In the face of all of this, insider buying and selling is showing that insiders are starting to think their shares are looking quite attractive at these levels. Corporate insiders are actually buying. In amongst this, where all of retail is telling us that we are 100% going down, we are guaranteed to go down at least 50%. We're following that 2008 fractal. We have to go down another 50% in the broad indexes for equities. In the face of all of this, the corporate insiders are starting to lean in and buy shares. Also, the best time to short stocks is when the majority of the stocks in the index are above their 50-day moving average. So you can see here, and here, and that correlates with the tops in the S&P 500. What does it look like today? The complete opposite. This is not the right time to be short in stocks. This is not the time to be expecting major downside. Is some further downside possible? Yes. Are we still looking down the barrel of a cycle low for the equity markets? Yes. As you can see, there is still plenty of time for a flush lower to occur. But does it have to be a 50% drop off a cliff? No, absolutely not. Could it simply be another 5%? Yes, that's all we really need, in my opinion. So with our situational awareness, we know that we've got a downward trend. We know that we're likely going to see some volatility over the coming weeks, but we do know that we're also working our way towards this cycle low. If we get a shockingly low CPI print, this is likely going to move up before dropping into that cycle low. And if we get a high CPI print, then we know that this is going to fall down into this cycle low. But either way, that cycle low is buyable, in my opinion. The same is true of the NASDAQ and, of course, the Dow. And I wouldn't be surprised to see this sort of drop down a bit and then break this trend line. Patience on the UKX has been rewarded. So looking for any sign of a bounce out of here, and I think we can get long pretty soon. But again, more patience needed. As you can see, patience has been rewarded because this would have been a trap so far and even a stop out by the looks of it. So continue to play patient on the FTSE 100 as I do with the US equities. Coinbase behaving as we would expect it to. I guess this is going to end up looking more like this, right? Drop into that cycle low and go. So we'll see how this goes. So far, more sideways until we can get into that timing window. Same is true of MicroStrategy, Riot, and Marathon. I will be sure to let you know when I start to accumulate positions, so make sure you're subscribed with the notifications on if you want to see that. Tesla as well. More chop until we can break out of this, and then I think this is longable. And the same is true of Apple, of course. Looking at oil. Interesting to see where oil was bounced off of, isn't it? Could maybe tighten this line up a bit. Hit some more precision on it. So interesting to see where this market has bounced. Also, this horizontal seems to be what the market is respecting the most. So I would expect this to push up one more time and then we can roll over. Perhaps this means we're going to see a high CPI print, or at least not a shockingly low one, although a lot of the data I've been covering on the channel over the prior weeks has suggested that we have seen the top in inflation. That remains to be seen. We'll certainly find out soon enough. Gold Looks like it's working its way back this way before it rolls over, in my opinion. So we'll see how that goes, but short and strong continue to push. Silver failed the retest resumption, came in for that retest, then broke straight below it. So this is in no man's land for me. Not really interested in this market at the moment. Bitcoin continues to behave, continues to act like I want it to act. So a little bit more waddling, drop down into the cycle low and go. And of course the same is true of Ethereum. Noticing some weakness from XRP, but that's okay. We will continue to push this trade and see how it goes. Still up quite significantly from our entry. Still up over 30%, so I'm not too worried about this at the moment, but this is obviously the first warning sign because we have lost this intermediate uptrend by the looks of it. But like I said, not too worried. This red line is the be all end all for me, so long and strong, continue to push. Dollar, is the dollar trying to roll over? Looks like we're rounding, so again, it's waiting for CPI today, isn't it? If CPI is lower, then we will see the dollar come off, and if not, if the CPI is higher, or particularly shockingly high, then this is going to take out the prior high as well. But for now, the top remains in the dollar. We'll see what CPI says. And the chart of truth, the US 10-year, again, kind of rolling over similarly to the dollar. Is this a double top? Are yields going to come off? We'll find out soon enough. If you found value here today, I'd appreciate it if you could drop a like on the channel, subscribe if you're not already. Go ahead and follow me on Twitter. Throw down in the comments if there's anything you want to see from me. And in the meantime, trade safe out there. Keep an eye out for volatility. Don't give the market makers your stops. All the best from me. Take care. Cheers. Bye.